Hi, and welcome back to the Food Fund, where we analyze investing in food, beverage, and restaurant stocks. Is a great food supplier company a good investment? In this video, we will be analyzing if Archer Daniels Midland stock is a buy. Could Archer Daniels Midland stock, ticker symbol ADM, continue its share price rise even higher? Let's find out. We have a lot to cover, so let's go ahead and jump right in. Cue the logo. Let's start with some background info on Archer Daniels Midland. Archer Daniels Midland was founded in 1902 when George Archer and John Daniels began linseed crushing operations. From these humble beginnings, the company has grown into a global leader in human and animal nutrition. They process agricultural commodities and natural resources, providing ingredients and solutions for food, beverages, and industrial products. Archer Daniels Midland offers a wide range of products, including vegetable oils, sweeteners, starches, animal feed, and bioenergy solutions. With approximately 41,000 employees, Archer Daniels Midland is headquartered in Chicago, Illinois. Now let's look at the price action. Starting with the one-year chart, we see that Archer Daniels Midland had a CAGR of about -23%. Zooming out to the 5-year chart, we see that Archer Daniels Midland had a CAGR of 6%. Archer Daniels Midland has been a big loser over the past year, but is a slow and steady gainer in the midterm. Now let's hop over to market share and take a look at Archer Daniels Midland's market share. Here we have the dashboard, where we can quickly gather a lot of information at a glance. Expanding the dashboard, we can look under food and see that Archer Daniels Midland is categorized as a farm products company. Expanding the farm products tab, we can see that Archer Daniels Midland has the largest market share of the companies in this category, but seems to be stagnant in terms for growing market share. Let's look closer at the year-by-year changes in market share. So we come down here and type in the ticker symbol for Archer Daniels Midland ADM and see that the market share is 10.4% out of the publicly traded food, beverage, and restaurant stocks currently in the market. Archer Daniels Midland commands a strong portion of food spend. The 5-year market share CAGR for Archer Daniels Midland is 0.24%. This means that Archer Daniels Midland has barely grown market share over the past 5 years. If we start in 2020, we see that the market share was 10.3%, 11.7% in 2021, 12.6% in 2022, 11.2% in 2023, 10.4% over the trailing 12 months. Archer Daniels Midland had been growing market share through 2022, but has had a pretty steady decline since then. Let's take a look at the fundamentals to learn more. Gross margin is 7%. This is very low, but similar to other farm products companies. Revenue has compounded at around 7% over the past 5 years and has reached over $85.5 billion most recently. Clearly, sales have been declining since 2022, which is bad news for the business and investors alike. When we look at cash flow, we see a flip from negative to positive over the last 5 years for operating cash flow. CapEx has worsened at a 17% CAGR. As a result, free cash flow has also flipped from negative to positive during this time period. Despite the rebound from 2020, both operating cash flow and free cash flow have declined pretty consistently over time. Along with declining revenue, this means that falling sales are having a large impact on the ability of the business to generate cash flow. Weighted average shares outstanding have declined over the last 5 years, going from 565 million shares in 2020 to 493 million shares most recently. Archer Daniels Midland has been very busy buying back shares. On one hand, as the share price falls, management at the company is doing the right thing by buying back shares cheaply. However, it seems little is being done to understand why shares are falling and to correct the problem. Now let's view return on invested capital. Return on invested capital has actually fallen from 4.3% in 2020 to 3.5% most recently. This value, along with revenue, peaked in 2022, which was the height of inflation. Since then, returns on invested capital have been lackluster. Another favorite metric is cash conversion cycle, a measure of operational efficiency regarding supplier and payer leverage as well as inventory control. Going from 61 days in 2020 to 48 days most recently, Archer Daniels Midland has gotten more efficient over time. Still, the benefit here pales in comparison to the worsening of the other metrics. Now, let's look at Archer Daniels Midland debt. The net debt to EBITDA has decreased over time, going from 3.8 in 2020 to 3.5 most recently. Still, The rapid rise from 2023 to 2024 highlights that the trend is starting to move in the wrong direction and does not bode well for the future of this company. Last, let's explore dividends. Archer Daniels Midland has a dividend yield of 4.2% and a payout ratio of 55%. Despite the falling cash flow, it seems Archer Daniels Midland is paying out dividends that its earnings can support. This indicates that the company's dividend practice should be sustainable. Dividends per share for this company have grown at a 7.4% CAGR over the past 5 years and a 7.6% CAGR over the past 10 years. Dividend per share growth has been consistent over time, then the recent acceleration might have more to do with the rapidly falling share price. If we perform a backtest comparison of investing $10,000 in Archer Daniels Midland versus the S&P 500, we find underperformance for Archer Daniels Midland. In that comparison with the S&P 500, $10,000 invested in Archer Daniels Midland would have grown to $16,875 versus $34,013 if invested in the S&P 500. This is an annualized return of 5.87% for Archer Daniels Midland versus 14.29% for the S&P 500. Archer Daniels Midland investment would have been more volatile, with the 24% standard deviation versus 15.39% for the S&P 500. Archer Daniels Midland underperformed the S&P 500 in terms of the best year performance, for which Archer Daniels Midland grew 39.95% versus S&P 500 31.22%, and worst year performance where Archer Daniels Midland fell 27.52% versus the S&P 500 18.17% fall. In terms of max drawdown, Archer Daniels Midland fell 48.10%. more than the max drawdown of 23.93% for the S&P 500. Archer Daniels Midland also massively underperformed the S&P 500 in comparisons using the Sharpe ratio and the Sortino ratio. The Sharpe ratio for Archer Daniels Midland was 0.27 versus 0.82 for the S&P 500, and the Sortino ratio was 0.41 versus 1.27 for the S&P 500. Archer Daniels Midland has been trailing the S&P 500 for a long time by nearly every metric. There are few food companies as large and as integral to food production as Archer Daniels Midland. In any event, is it a buy? Before sharing my final thoughts on that, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Now, let's get into my final thoughts. Okay. Let's go to the spreadsheet and write out some key values for Archer Daniels Midland. It is a food company with a gross margin of 7%. The 5-year revenue per share CAGR is 11%, and the 4-year free cash flow per share CAGR is negative 36%. We used the 4-year free cash flow per share CAGR because the company had negative free cash flow in 2020. The small gross margin and modest revenue gain is okay, but the decline in free cash flow spells trouble. A return on invested capital of 4% is low and worsening. Next, the cash conversion cycle of 48 days is still very high, and the trend of improvement seems to be at an end. Concerning debt, a net debt to EBITDA of 3.5 means that it would take Archer Daniels Midland about 3.5 years of earnings to pay off its debt. So from a fundamental standpoint, Archer Daniels Midland is not doing well. Now let's switch our attention over to valuation. The price to earnings growth, or PEG ratio, is 9.4, indicating that Archer Daniels Midland is extremely overvalued relative to their projected earnings growth. Archer Daniels Midland is a giant company. They are a massive, true heavyweight in processing agricultural commodities. They're in everything from grains to oils, and they've historically held a huge chunk of the market. But lately, things haven't been looking quite as rosy. While their market share is still significant, it's been shrinking. Competitors are nipping at their heels, and the company's revenue has been declining. This raises a red flag because, in a competitive industry, you want to see a company that's growing. Another big issue is their poor operational efficiency. This means they're not maximizing their resources as well as they could be. This translates to lower profits and less room for growth. On the flip side, Archer Daniels Midland does possess a very large and diversified infrastructure. They are very well established and have a global reach. So, in terms of sheer size and breadth, they are still a force to be reckoned with. However, investors have clearly not felt great with their investment in the company in recent years. Overall, I give this company a 0 out of 10 using my proprietary scoring system. They are a big and bulky legacy food company that is losing sales and operating very inefficiently. It will take a miracle to turn this company around, and the macroeconomic environment is not favorable. Current shareholders, good luck. Many thanks for watching. What do you think about Archer Daniels Midland? Please share your thoughts below. It is always great to hear from you. Please check out some more videos right now, and don't forget to put your money where your mouth is.